Welcome to the Passive Mobile Home Park Investing Podcast with your host, Andrew Keel. This is the podcast where you can get the education you need to invest 100% passively in the highly profitable niche of mobile home parks.
Welcome to the Passive Mobile Home Park Investing Podcast. This is your host, Andrew Keel, and today we have an amazing guest in Mr. Zach Dixon. Before we dive in, I want to ask you a real quick favor. Would you mind please taking an extra 30 seconds to head over to iTunes and rate this podcast with 5 stars? This helps us get more listeners, and it literally means the world to me. I check every single one of these reviews, and it just really fills up my cup. So thanks for making my day with that review of the show. All right, let's dive in. Zach Dixon bought his first rental property in 2017. And since then, he and his wife, Rachel, have acquired over 300 mobile home park lots, as well as some apartment units and single-family home rentals. Zach, we're excited to welcome you to the show, brother.
Thanks for having me. I'm really excited to be here, actually.
Yeah. Would you mind starting out by telling our listeners about your story? I know you were, a cop for many years and a detective. So maybe you can start by sharing your story and how in the world you got into manufactured housing communities.
Yeah, for sure. So my wife and I had talked about for some time investing in real estate. We wanted to do it. We kind of seen the benefits of it. Like you mentioned, I was working as a cop. And as you know, cop salaries aren't the highest. And so we wanted a way to really, looking back, our goals were very small, as I'm sure a lot of people look back and, hindsight and like, wow, why did I have such small goals? But I just wanted to add really income to my salary. I just wanted a little bit more income. And so we started looking at real estate, and really it was going to be single family homes. But even those were kind of in the area of Colorado where we live, those were kind of out of our price range, if you will. So we actually found a single mobile home on a piece of land and basically a single family. And so we purchased that. All in, we were, I think, $17,000, which was a really good deal. Yeah. We rented it for 2 years and turned around and sold it for, I believe, $49,000. And so then 1031 that. But in the meantime, in those 2 years, we were also buying other small multifamily. And it wasn't until, I guess, a couple years after buying our first one, we bought our first mobile home park. And so we got familiar with mobile homes. And I have a little bit of a background in construction, done that most of my life. And so to me, they're easy to work on. I know a lot of people don't think that, but yeah. So fast forward, we started really trying to acquire parks. We fell in love with the kind of the model, if you will, and tried to figure out why it wasn't being talked about more. And as you know, now it is being talked about. It's kind of a big deal. A lot of institution money going into them. A lot more banks are financing them now, whereas before they weren't. So, yeah.
Wow, that is fantastic. So that very first mobile home was your first rental that you got.
That was it. Yeah.
You got it for 17 grand. That's amazing. Was that off market or was that just like a listed deal?
It was a listed deal. I think Rachel's seen it on Facebook, but yeah, it was a listed deal.
Wow.
2017, back when, I think everybody wishes they could have bought. And so I wish we'd have bought more. I wish we'd have bought more then, but we've learned a lot. And so going back to kind of our goals at the time, we bought the first one, we got excited. And, my big fancy goal was like, man, if I could have like 15 of these things by the time I'm, 60, 65, add some, another 100,000 to my income, I'll be good. And obviously those goals changed very quickly, and which is a good thing.
Yeah, no, that's fantastic, man. And then, why jump into mobile home park investing, versus staying the single family home route? What was it? And how did you get educated on like the possibility of manufactured housing?
So really at the time we started, we listened to, I'm sure you've heard of Bigger Pockets podcast.
Sure.
And I believe this was before even Brandon was buying mobile home parks. So I didn't really hear a lot about mobile home parks. It was kind of a new concept. I knew about them, but wasn't super familiar with them. So what made me really fall in love with the mobile home park model is So by this time we had multifamily. And as you know, with apartments, you have a turnover. You go in and typically, it depends on how great the tenant was, you're going to redo all the flooring, the painting, just a whole bunch of stuff. But if you can get a park where you're in essence doing a land lease and other people own their homes, well, there's quite a few advantages to that model. One, what I've seen, and I guess this is the consensus, is tenants typically stay longer. You have a longer tenancy. There's more sense of community. People take pride of ownership. And then the biggest one for me is there's no maintenance other than your infrastructure and your roads, if those are privately owned, trees and whatnot. But that was like the big aha moment for us, is you don't make as much maybe per lot as you would per apartment, but you have a lot less headache. And in my opinion, it's a lot more stable. Mm-hmm. It's so affordable housing.
Yeah, you came across it. It's affordable housing. You kind of get more bang for your buck in terms of number of units. And you came across it on bigger pockets. And then you said, okay, I want to buy a mobile home park. And then what did you do? Did you look at listed deals? Did you start talking to brokers? How did you get that first park? And when did you close on that one?
That one would have been, 2019. 2018, end of 2018, 2019. And that was in North Carolina. That was a smaller park. It was listed. I had called about it, talked to the broker, did a drive-through of it, and then kind of just stopped pursuing it. Realized hey, I should probably go back and look at that park. I think that's a good deal. The numbers make sense. And so at that time it was actually expired. So we still did the deal. But a little bit of a backstory. So the financing, as you are aware of, was very difficult. I must have felt like I called 50 banks. I may not have called 50 banks, but I called a lot of banks, and everybody, it was like, no. Finally found a bank who we've since used quite a bit, small local bank in North Carolina, and they financed it, 70% of purchase price. And so that was our first one. And obviously, financing that's kind of, I guess, has historically been the big hurdle to investing in mobile home parks.
And why? Is it because you didn't have a track record, or is it just finding a bank that wants to finance, and hold this as collateral? Or why has it been a struggle for you, do you think?
At the time, I don't think there was a lot of, if you will, publicity around the parks. It was kind of looked on as a like the lowest of the lowest. And it seemed like banks didn't really want to touch it. There's issues with trailers being able to be pulled in and out, which is a large part of, if it's producing a certain amount of income and you go pull all of the trailers out, the bank has really no income. They just have the land. So I think that was part of it. But yeah, since then, we've had quite a bit better luck. Actually, today, just got a call from a banker that said we got approved for 2 refinances. For the interest rate environment we're in now, pretty good terms. So it definitely has changed. I think it's starting to get some of the attention it deserves, if you will.
Yeah, tell us about your model, right? So what does the typical park look like that you're looking to buy? I mean, you have 300 lots. Are those, 30 lots, 100 lots? What do those look like?
They vary. Our largest park is 90 lots. Our smallest is 8. With a single family home, and that's in a very hot market. They kind of vary. We have historically kind of gone after the smaller parks. It is kind of a niche. For a while, it didn't seem like there was as much competition or as much focus being given to the smaller parks. Now they're all pretty popular. But I feel like for us, we could make the numbers work on the smaller parks.
Yeah, same here. I've seen that, where those 30 lot parks, you're able to get it at an 11 cap going in. That's common. So I think there is an opportunity there. Now, are you raising money? Are you doing JV deals with equity partners, or how are you putting these deals together?
Yeah, so backing up, we bought our second park. We were super excited about it. We bought that one with bank financing as well. We did extremely well. We held it for not even 7 months before an investor came in and offered us over 3 times what we paid for it. Wow. So from that point, we started.
What did you do with that one? That was your first, was it a big value add project? You had a lot of big heavy lift? It wasn't.
No, I'll tell you the story. So it was actually an off-market park. It was from our hometown in North Carolina, where both my wife and I grew up. And
Which
I
is
went
where,
out for
by the
coffee.
way?
Wilkesboro, North Carolina.
Wilkesboro. Okay.
Yep. So went out driving one morning to get coffee, and I thought I'll go drive around and look for some parks. So I actually stopped in by the mobile home dealer, and I was talking to the lady there. I was like, "Hey, you know, have any good deals on parks?" And she's like, "No, sure don't." She's like, "Well, there's that one over off Armory Road," and I'm like, "All right, who owns it?" She told me. I'm like, "That's our realtor that we used on our first park." Turns out he didn't own it. He managed it. So I called him, kind of got some details. This was during COVID. So this is actually, maybe it was our third park. Anyways, it was during COVID. A lot of stuff going on. Long story short, we bought it for $300,000 and used bank financing. And 7 months later, got an offer. We raised the rent a little bit.
Okay.
Didn't really do any value add, but got an offer for $945,000.
Wow. How many lots was that?
That was only 24.
Wow. 24 lots. You picked that up for $300K. I mean, that's phenomenal.
So that was like a kind of a big boost for us, because then we were able to take that money, and I didn't realize it at the time. Typically it's a 2-year waiting period, but because we weren't anticipating flipping this, or, we hadn't even really added any value other than raise the lot rents a little bit. We got advice from our CPA and attorney, and they were like, "Yeah, you could 1031 this, even though it's been, I think it was 7-8 months, right at 7 or 8 months." And so we did that. So we rolled that into several other properties, and so that was kind of a big boost. And then it was around that time, maybe even a little before, we started kind of exploring the benefits of private money, so lending from individuals. And really, that's kind of what we do now. We do a lot of owner financing if we can. Obviously, that's always preferred, especially if you can get good terms and everything. But we've started using private money, and kind of our model is, if we can get a park, with private money, either 100% or a good portion of it, and owner financing or bank financing. We found banks that'll work with us that way. And then go in, but backing up, preferably private money, because then you can buy it outright, add whatever value you need to add, raise rents, infill, whatnot, and then you can refinance it. And that's actually what we're doing. We're in the process of doing now, is refinancing a couple deals that we got with private money.
Very cool.
So that's what we've done lately.
Awesome. And you guys are based out of Chattanooga now, right? Is that right?
So we actually live in Colorado.
You live in Colorado. Okay. Got it.
Colorado.
Gotcha.
Yep.
And what part of Colorado?
Southwest Colorado. You know where Telluride is?
Mm-hmm.
Little ski resort. It's about 30 minutes outside of Telluride.
Very cool. And where's your portfolio at? Is it mostly in the Carolinas? Is it?
So we have some stuff here in Colorado, and then we have South Dakota, West Virginia, North Carolina, and Florida.
Okay. So kind of spread out then a little bit.
Kind of spread out quite a bit. Yeah.
Yeah. And do you manage all that in-house?
We do. Yeah. Rachel and I do. Yep. All of our own management. We're probably to the point where we're going to start exploring some different options with that, because it's quite a bit, and we're growing. We just closed a park 2 days ago, and we have 3 more to close by the end of the year. So we're growing, and it's I know.
It's December 7th. You got a lot of work to do.
Yep. I know. So it's to the point where we would like to try to hire management for at least a good portion of it. So
awesome. Yeah. What do you think is the toughest hurdle to mobile home park investing, based on your experience thus far?
I would say knowledge, obviously, being educated, going into this educated, kind of knowing what you're getting yourself into is probably one of the more important things. Knowing what to look for.
Yeah. How'd you do that? Like, to know what to do in due diligence and things like that?
Trial and error. I listen to podcasts. Frank Ralph, I'm sure you've heard of him. I listened to his podcast. That was helpful. Little short clippets of stuff to do on due diligence. But yeah, just that and trial and error.
Have you ever been to his boot camp? Like the
I have not.
Boot camp? You have not? Okay.
No.
So it's just podcasts and just being resourceful online and just kind of self-educate.
Yep.
Trial and error.
Yep.
Okay. And then, what do you think is like the best strategy right now? Or what's your strategy, for these next parks you're looking to buy? Like, what's the size? What do they look like? And then, what is your big value add that you bring to the parks that you purchase?
So typically and I don't think we talked about this yet, but tenant owned homes versus park owned homes. We obviously prefer tenant owned homes. So we are attempting to purchase parks that are primarily tenant owned homes. We don't mind park owned. We have a decent amount of park owned. But then, like I said, our model is really to acquire these things with private money, or at least a good portion of it, and then hold it, value add through infill, which has been a little tough in the last couple of years. As you know, prices of new homes have gone up a bunch, but you can still find used homes at a decent
and about
price.
About how many homes have you guys infilled over since you started buying parks back in 20?
Not enough. Not enough.
Just it is ballpark. How many you think?
10, maybe
10 or so.
10.
Okay.
And then we've converted quite a few park-owned homes to tenant-owned homes. We've done that quite a bit. And with that, if you can buy the park based off as if it were all tenant-owned homes, then that makes it obviously easier to convert. If you go in buying a park with numbers based off the park-owned homes and try to convert, a lot of times it doesn't work.
Totally. Okay. So yeah, that's some of your strategies. And then have you sub-metered a park yet? Like taking the water and sewer and put, Metron Farnier meters on it or something like that to bill back?
We have. Yep. Okay. We've done that actually only one time. Most everything we buy now is already sub-metered, not necessarily by Metron or whatever, but it's typically through the city. It's already sub-metered, which is nice. So, but we have done that on one park, and that was actually pretty straightforward. We hired a plumber to go in and do it. He actually was reading it for us for the first little bit where he had a service, and it was fairly affordable. So it was a good thing. Saved a decent amount of money because on that park, the water and sewer bill was actually quite high.
Okay.
So,
and tell us, Zach, what are the top couple of mistakes that you would say you've made in mobile home park investing that, all of our listeners can learn from?
Oh, goodness. Probably not doing good enough due diligence. I'm pretty thorough when it comes to due diligence, but we did buy a park where I didn't go in all the park-owned homes because there was an excuse for this home, why they weren't home, and this home. And I was like, all right, well, they look okay from the outside. Come to find out they weren't. But yeah, that's probably one of the bigger, really doing thorough due diligence, I would say is a big one.
And do you own any parks with private utilities like wells or septics or lagoons or anything like that?
No wells. We own 2 parks on septic tanks.
Okay. But the rest are just public utilities, city water.
Public utilities, yeah.
Okay.
Yep.
That's cool. Okay. Yeah, I mean, if you were talking to one of your private money partners or a potential investor, what would you tell them are the most important things that they should look out for when investing into a mobile home park? Or if you were going to invest passively, what would you want to know about the deal to get comfortable with it?
So I would want to make sure it was in a good area, that there was good demand for housing. I know it's a little tricky nowadays. It seems like there's demand everywhere, and there kind of is. But make sure that see what kind of tenant base you have, jobs, whatnot, and then I would
specific ways to do that. Besides going to the park.
So I've only done this a couple times. Is run test ads where you can run a test ad for a lot for a home and see what kind of response you get. So that's I think that's a common way to judge the demand for that type of housing in a particular market. So yeah, that's a good way. Talking to realtors, talking to property managers, seeing hey, is there a good demand? Is that, oh yeah, we get so many phone calls every day looking for rentals, or, that's another good way to kind of judge the demand in an area.
Awesome. Okay. So that would be the main thing you'd tell, if you were going to passively invest in a deal, you want to make sure the market's solid. Is there anything else you would look at? If you were going to passively invest with me or another operator, you saw a deal, what would it look like?
Okay, that's where I get excited. I get excited about this topic and investing passively with somebody. So I think the number one thing, and you've probably experienced this, is trusting the operator. I think that's it. I mean, if I could say anything, the market, the demand, all that stuff, in my opinion, kind of goes out the window. I would rather say, okay, this guy, Andrew, he's been investing for so many years. He knows his stuff. I mean, he's gotten these kind of returns. That's where I'm gonna put most of my decision making based off of.
Yeah, track record.
Yeah, the track record. Because without a track record, there's a lot of people, especially now, there's a lot of new syndicators and a lot of new people doing this. And that's the scary part to me, is if I was going to invest, and we've been talking about that, like, it's actually there's a lot of benefits to it. You don't have to manage the property. You don't have to find the property, get the financing, deal with all the headache. Yet you can still get a really good return on your money.
I totally agree. I've bought 6 parks myself this year that I syndicated, but I've also invested in 5 passively because I like to put the money to work. And I like, if I trust the operator and I like the deal, I like that. I like that, because it's a lot of work, and
it is.
Before we started recording, what do we say? I was like, oh yeah, one of the typical questions is, hey, what kind of mistakes have you made, and what can we learn from? And you were like, yeah, it's always something, right? Every day.
It's always something.
Day.
Yeah.
So especially when you're self-managing those first, 500 lots, it's a lot. I mean, it is. You're doing everything from opening the mail to, paying the bills to doing the collections, follow-up calls. So it's a lot. I've totally been there.
Yeah.
So.
And what I tell people is because it is a lot of work. I think a lot of times it's easy to look at somebody that's doing this and be like, oh, that's so easy, making good money, all this. And it's true. Like it is, there's tons of benefits to, I love mobile home parks as a whole. They're very secure. There's tons of benefit, but at the same time, like you said, there is a lot of work. And, depending on what cap rate you're buying a park at, and this is what I explain to people that are maybe interested in investing passively, or just if I get on a rant and talking about it. So I can go buy a park, and let's just say I find 8-10% cap rate. That means if I go in and buy that thing all cash, I'm going to get an 8 to 10% return on my money.
Mm-hmm.
Whereas I could do the same thing. I could get the same return by passively investing. I'm gonna take now. However, you don't get the appreciation, but you get a lot of other stuff. You get the peace of mind and the true mailbox money, if you will. So there's tons of benefits in investing.
And some syndicators, will share a piece of the upside too. So it's not just a set interest rate that you're getting, a piece of the actual equity. Like in our syndications, we give a piece, of the upside to the LPs. But let's play devil's advocate for a second. Why not invest in mobile home parks? Like, what's the top reason you'd say someone, should not invest in the asset class?
So I would say, going back to my original comment, if you don't trust the operator, there's a lot of room for error. And what you see a lot of times is people that buy parks, they're excited, they maybe overpay, and then they kind of just let it run. They let it run on it. And we've bought parks like this where they just kind of put it on autopilot, and it doesn't run very long or very smoothly that way. And so you come in and you can revive that park back to life. But that would be my first caution to not buy mobile home parks if I was playing the devil's advocate or investing passively is, like I said, going back to trust your operator, because they will know what's a good deal, how to run it properly to maximize your return. And other than that, I can't really think of another reason to not invest.
Yeah, no, that's
honestly.
That's great feedback, because I totally think, like, from knowing other operators and knowing their strengths and weaknesses, I think that's a really important note. Like, if they're on it and they're like doing this every day and they're giving these attention, like, they can be very successful.
Right.
But if they're not, things can go south really fast.
Yeah.
And I remember a podcast, it was a guy that works for Freddie Mac. This was years ago. And I remember him saying, like, the default rate on mobile home park loans is very low. It's like one of the lowest. But when a mobile home park goes bad, it's like 50% worse than any other asset class to bring back to life, because it's like very expensive, because you got to get, the homes are either trashed or you got to, tear them down and bring them in. So it's very capital intensive when one goes bad. So you need someone that's on it. You need an operator that's on it for sure. Zach, what's the perfect mobile home park look like in your eyes, and why?
Oh, goodness. So I would start with city utilities, city water, sewer, direct build to the tenants if you can, whether that's through Metron or Bill Back or just through the city. all tenant owned homes. Is as much as people, I feel like look at the numbers from a park owned home, all tenant owned homes. And then I would say, kind of the cherry on top would be if you can find it. We own one like this where it's all city maintained streets. So it's basically an entire city block. And so you have the little driveways, but everything else is scraped.
And they plow the snow and everything.
Plow the snow. Yeah. Upkeep the road. So that would be like the ideal, I would say the ideal park.
Yeah. And it's 100 lots and you buy it at a 10 cap.
Exactly.
That's awesome. Yeah. What do you think is going to happen, the next few years with like the direction the economy is going, and how do you think mobile home parks will fit in with that?
So it's hard to say. Every day I read a different article about interest rates are going to go down next year. Oh, no, they're not going to go down that much. They're going to, whatever. So my theory is we're always, at least Rachel and I, we always plan on buying. Is no matter what the market's doing, we just need the numbers to make sense. We need it to make sense to us and kind of like look at all the worst case scenarios financially and we'll still buy. I think that mobile home parks are going to become more and more popular. As you know, they're not making any more of them, or at least, if they are, there's a lot of stipulations and there's only a couple states really that allow it. So I think they're going to become more popular. It's an amazing affordable housing option. And I think that as we've already seen in the last, 5 years, the popularity increase with, I can't remember if it was Blackstone or BlackRock. One of the big companies they invested so many billions of dollars into mobile home parks. That right there should tell you like it's going to come around, I believe, to where I believe more and more mobile home parks, I forget the percentage of mobile home parks owned by mom and pop operators. And you're seeing it now. It's going to slowly dwindle to where it's going to be owned by big corporations, because I think people are starting to see the benefits in mobile home parks.
Yeah, I think it's something like 70% are still owned by mom and pops, but most of those are baby boomers, right? And they're retiring now, so it's trading hands, and there's more groups like yours and mine that are, medium-sized operators. And then there's the big boys that are going after the institutional quality assets. So yeah,
exactly.
I definitely think it'll become more institutionalized, and it'll be interesting. But I think it'll take time, because not every mom and pop wants to sell today.
That's the big thing. That's it. Trying to find somebody that wants to sell.
So you mentioned something earlier, Zach, that really intrigued me. You said that you think mobile homes are fairly easy to rehab, and you have like a construction background. So I'd love to hear why. Because I have some thoughts on this, but yeah, I would love to just get your insight.
Oh goodness. So we, like I said, we do own a fair amount or a decent amount of park owned homes, mostly down in Florida. And so the challenge becomes trying to find people that know how to work on them. Mm-hmm. And I'm always just like, guys, it's so simple. Like it's not that hard, but like to the point where I brainstormed the idea of like, do I start a company to rehab mobile homes and just do large scale, like go to big operators and be like, look, I will rehab 10 homes at a time, and then if you can systematize it to where you get your supplies or you come up, I've been even trying to think of better ways to improve, not necessarily the mobile home itself, but the rehab process. So really all it is it's a frame, it's a trailer. And then you have your floor joists, your subflooring, your plywood. Yep. In older homes, as you know, it's the particle board, basically compressed sawdust board. And then you have your walls. And a lot of times the walls are built on top of the carpet. So it's really interesting the way they're built, but they really are built very simply. And so if you understand how they work, they're really easy to work on. Like the water lines run a certain way, it's very simple,
access, right? You have access right under the homes. It's like a crawl space, right? So I see the benefit of like it being easier, right, to work on versus some of these older houses with the the concrete, foundations and things like that. But at the same time, a lot of people don't realize that like the doors are a different size. The windows are different sizes. The drywall is a different thickness. Everything is a little bit different. The tubs are different sizes. The fixtures in there are different. So it's not like you can just go to Home Depot and get all the pieces you need to fix these things. And I think, like you're saying, if you can systematize it and know, hey, for every house, I need, this color paint, I need this size, baseboards, I need this, PEX water lines, and you get the underbelly secured, all that kind of stuff. It's just so different too for like, homes in the South versus homes in the North where it gets cold. You got to get those water lines protected. But yeah, no, that's interesting. I've never thought of it that way though, as like they're simply built, right?
Yeah.
They have nuances to it. So that's cool.
Yeah, I always tell people, like, number one thing, take care of the roof. Like if you start having leaks in the roof, it's going to obviously trickle down, no pun intended, and ruin everything. Any kind of leaks, get them taken care of. But yeah, they're simple. Like you said, a lot of stuff is specific to mobile homes. So that's why if somebody has a decent amount of park-owned homes they're trying to rehab, get with a supplier, somebody that knows mobile homes. And they're easy to work on. Unfortunately, you don't find many people that can or are willing to.
Are willing to. That's the key, right?
That's it.
Awesome, Zach. Well, dude, thank you so much for coming on the show and sharing a ton of nuggets about your journey. If any of our listeners would like to get a hold of you, what would be the best way for them to do so?
So you can follow us on Instagram, Green River Capital Partners, and then our email address is greenrivercapitalpartners@gmail.com. So either one of those are great. So,
okay, awesome, man. Well, thank you so much for coming on the show, Zach.
All right, thanks for having me.
That's it for today, folks. Thank you so much for tuning in.
Hey, are you getting value out of this show? If so, would you mind please going over to iTunes and leaving the show a quick 5-star review? I have a goal of hitting over 100 5-star reviews by the end of 2021, and it would mean the absolute world to me if you could help contribute to that. Thanks ahead of time for making my day with your 5-star review of the show.